Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is October 3rd, 2023, and we are going to have a gold price and lithium market update. We're going to focus first on the gold prices. It's been quite volatile here over the last week. We will update that, and then you might be wondering, what does the gold market have to do with the lithium market? I'm going to show you what they have to do with one another in this update. And you're going to want to stick around because we are giving away here absolutely for free one of the new picks that we have made here, one of the new companies that we are investing in. Myself, my colleagues, and our subscribers, you're going to see that entirely for free here in this update. So stick around. Make sure you hit the red subscribe button and the bell icon to be notified when these free videos come out on YouTube. And also make sure to follow our account on Twitter at iGlobalGold. It's also called X these days, at iGlobalGold, because you can see sometimes I don't have a chance to post videos for a couple weeks, but I often make quicker updates that you can get for free on that Twitter account. Let's have a quick disclaimer, and please remember, no one is paying me to talk about these investments. I receive no fees, no kickbacks, no compensation whatsoever from the companies that we are talking about here. All I do is publish the exact research that I am using and my colleagues are using to make the investments that we are making, so that way we do not have the conflict of interest. Let's talk about the gold market. Okay, very important chart that we are looking at here. And if you are new to the gold market, remember we've been following this trend, this primary trend, 5 years out of the lows of 2018. It began right there, August of 2018 at $1,180 per ounce. The trend began to move its way upward as we worked our way through 2018 into 2019. Notice how the trend is really holding in there. The market begins to move away from the trend, but it comes back to it a few years later. In retrospect, this decline, we could say, was a false breakdown because we had further successful hits of this exact same trend coming in here into 2022, early 2023, and just a month ago. So this is the most important intermediate term. It's a 5-year rising trend for gold. And unfortunately, this trend has just broken. You can see it right there. It's partially hidden, the current candlestick here, by the blue arrow. But notice how the price action has just sliced lower through this support here. This is not what we wanted to see. We have been noticing some reasons for this. The US dollar has been strong. The rest of the commodity markets have been weak. And eventually, it appears here that gold has finally caved to this support. So what does this mean now that this support is broken? Unless gold can recover this within the next week, which at this point, it looks doubtful that it will do that. What it means is, at best, we are going to have price action like this for the next 1 to 2 years, where if gold is eventually going to break out, it's going to have to break out to new highs, but on the opposite side of the broken trend. This is the rule in technical analysis. Support turns into resistance. And so we would expect this trend to act as resistance going forward. And if the market is going to make new all-time highs for the gold price, that is not going to happen until 2025 at the earliest. This would be the bullish scenario. So it's important right now to temper expectations in the gold market. If in fact it's going to move higher, it's not going to be for another couple of years. Let that sink in for a moment, and this may be a time, if you're new to the precious metals markets, to start paying attention to who the voices are right now who are going to be telling you Any minute, gold is about to blast off. Any minute, gold is going to make a new high. Follow them. Follow what we're saying here and rewind 2 years from now and see what turns out to be correct. The message of the charts here has a language all its own if you know how to study these charts. This is the bullish scenario for gold, not for another 2 years. The bearish scenario is that this last support here at 1680 breaks within the coming year to 18 months. And in fact, we have a long-term top that has formed in gold from which we might see many, many years of declining precious metals prices. So this remains to be seen. The key support is going to be 1680 coming up over the next several months as we get into that level. Right now, though, this is not bullish at all for gold. And so if gold is going to be, let's say, stagnant for the next 1 to 2 years, we have to pay attention here to this Dow to gold ratio. Remember, we're looking here at the entire history in freely traded gold era, going all the way back to 1970, the relationship between the Dow Jones Industrial Average and gold. And so the way you can think about this is the higher that this ratio moves, the better that the Dow is doing. And the lower that this ratio goes, the better that gold is doing. Remember, 1980, for example, was the peak in gold. Down here in 2011, we had another peak. So the lower that this ratio goes, the better that gold is doing. Right now, the ratio is sandwiched in this zone right here, and it's been sandwiched for the last several years, just kind of moving sideways. But this thing is getting ready to break out very strongly. And with the weakness that we've just seen on the gold chart alone, if we look at where this ratio closed here at 18.10, right now for this to break out, it would have to exceed the 19.10 level. That's only 5.5% away from where the ratio is right now at 18.1. So 5.5%, what that means for gold, which is trading at 1800, if gold falls another $100 from here, it means this ratio will break out upward in favor of the Dow Jones. And where a lot of investors get caught up, I believe, is that they think that what I'm saying here is that, well, if the Dow to gold ratio breaks out, it means you have to sell all your gold and put all your gold into fiat assets, into fiat currency or bonds. I am not saying that at all. I think fiat currency is an abomination. I think we should get rid of fiat currency. I would support going on to a gold standard, but I am also not going to argue with the message of the market. If that ratio breaks upward, and it's threatening to do it right now, and it's only 6% away from doing it, the other alternative is not to sell precious metals and hold fiat currency, but it's to sell some precious metals and move those funds into other real assets, other tangible assets, other commodities, things that cannot be printed out of thin air by politicians or central bankers, right? So there is an alternative. So what I want to do is now share with you the exact investment that we are making here to capitalize on this theme. And this is an investment that actually hits on both at the same time. This is a company called Nevada Sunrise Metals Corp. And you can see the tickers right here. It trades on the Toronto Venture as NEV. And it trades on the US OTC exchange as NVSGF. This is a company that has an existing gold deposit already demonstrated in the ground, over 100,000 ounces, you can see right here in the key mining data, but they also have a new lithium discovery that they have just made. So you have the backstop of gold, you have an asset already on the balance sheet, over 100,000 ounces of gold, and they've made this new lithium discovery, which will play in with the theme of expansion of electronics, expansion of batteries for electric cars, expansion of medical uses for lithium, all these ways that our society will need other hard assets other than precious metals. So I want to talk more about what this company is doing, and then I want to talk about a couple different ways that you can participate in this. So here is the key financial. By the way, this is the exact report that went out to our premium subscribers. You're getting to see it for free right here on our YouTube channel. This company only has a valuation of $6 million right now. This is tiny. If this company gets to the production stage, it could easily have a market cap of 100 million or 500 million. So do the math on that. Of course, that would be several years away. This is going to be a long-term investment. You can see the number of shares outstanding. It's a fairly tight structure still at 103 million. Insiders and institutions own 25% total. And the company is raising money right now. Remember, the company has no debt, no revenue because it's a development stage company. This is how mining companies work. They have no revenue until they're producing. And so what they do is they go out and they raise money by private placements, by other equity financing, and then they take that money and they expand the deposit in the ground. And there's a mistaken belief that every time that they raise money, it's dilutive to existing shareholders. Well, sometimes it can be dilutive. However, if the company takes those additional new funds and goes out and finds new gold or new lithium in the ground, the new issuance can actually be accretive to existing shareholders because they have found more metals than they previously had for the market cap that exists. So as you can see, they currently do not have a lithium resource, but it is within 12 months of being published, and they have a new lithium discovery. And in the next part of this video, we are going to talk about the discovery that they have just made, and we're going to talk about the existing gold resource that is already in the ground. So we'll get to those details in just a moment. I want to share with you that one way you can invest in this company, of course, is by buying shares in the open market. Those are the tickers right there. However, if you are a higher net worth investor, if you are ready to invest $10,000 minimum in Canadian dollars, which is roughly equivalent to 7,000 US or about 6,000 British pounds, you should consider joining us in our service called Elite Private Placements. Because what we do in Elite Private Placements is we buy the exact same companies that you're seeing here. However, we buy those shares at a discount. So can you see right here, the stock closed at 10 cents per share today. We have negotiated with Nevada Sunrise Metals Corp to buy shares at 8 cents. So if you buy at 8 cents and you turn around and sell them at 10, you are looking at a 25% instant profit. Of course, there's a 4-month hold period required for the shares. So in that amount of time, the shares could go even higher. The shares could go lower. But as a net sum, just to start off the bat, you have to ask yourself, would you rather be in a 25% instant profit or not? How else can you achieve a 25% instant profit based on the market price of something in any other market around the world? I don't know of any other way to do that other than by investing via private placement. So you get a 25% instant profit. The other thing that you receive if you make this exact same investment by our Elite Private Placement program is you receive free 4-year full warrants. This is no joke. And those warrants are exercisable at 12 cents per share. The stock traded at 10 today, so only 2 cents higher, and you are in the money on those warrants, and you have 4 full years to exercise those warrants for additional profit. Again, remember, this is only available if you invest via private placement. This is what our elite members get. So whether you're going to do it in the open market, or if you want to get these additional instant profit and the free 4-year warrants, make sure to join us in Elite Private Placements. And remember, the deadline to register is coming up. It's a week from Wednesday. It is October 11th. There can be no exceptions made to this deadline. We negotiate these deals with these companies. We do all the research that you're seeing here. And then we go out and we typically only have 1 week to close this deal. So make sure to get signed up as soon as possible if you want to take advantage of this. Okay, so now get ready. We are going to cover the lithium market fundamentals if you're new to studying lithium, and then we will get back to more of the research on Nevada Sunrise metals. If you're new to the lithium market, let's do an overview here. Of course, the big picture topic is going to be electric cars, the electrification of transportation, battery cells, all used in these lithium ion batteries and the new solid state batteries that are coming out. Let's talk about some fundamentals. Global lithium production is currently 90.7 million kilograms per year. Okay, interesting number. The average electric vehicle uses 8 kilograms of lithium in this battery. Just doing the math means that the world can produce 11.4 million electric vehicles per year. Aha. When you read what world governments are doing, and I've spent many hours going into the literature, looking at what various economic bodies are projecting, various think tanks, the UN, various groups. We may or may not agree with everything that these groups are saying, but we can very clearly see the trend that is going on here around the world. The International Energy Agency, which is basically like a think tank representing all of the world's major developed economies, says that 2 billion electric vehicles must be on the road a little bit over 25 years from now. It's not that far away for the world to achieve this net zero emission goal that they have set and that all these countries have agreed upon. So you need 2 billion of these cars to get on the road. The world can only produce 11.4 million per year. How is this going to add up? The answer is you're going to have to find a lot new lithium, and the lithium price is going to go a lot higher in the future. Let's look at a few other things. This only includes electric vehicles. What about all the other demand for lithium? Electronics, medical, batteries on our cell phones and our laptops, right? So, I mean, you got this competition from vehicles. You got the electrification of everything going on right now. Last but not least, look at what is happening just here in the United States. Let's talk about official orders, executive orders that have come out. In 2021, the Biden administration defined lithium as a material essential to national security via an executive order, and you'll see why the administration did this. But let's look at the actual text here, straight from the White House itself. Critical minerals provide the building blocks for many modern technologies and are essential to our national security. This includes lithium. Why? Because China controls most of the market for processing and refining cobalt, lithium, and rare earths. So, via Executive Order 14071, called America's Supply Chains, we must eliminate the over-reliance on foreign sources and adversarial nations for critical minerals and materials posed national and economic security threats. So there it is in black and white, right out of the White House here in the United States. The U.S. is going to have a major push towards securing its own supplies of lithium over the next 2 decades. And so what is this investment in Nevada Sunrise Metals? We're talking about a new lithium discovery right here in the United States in Nevada. This is going to be a major push when we think about growth of technology and industry over the next 2 decades. Let's take a look at some more fundamentals, and then we'll get into Nevada Sunrise specifically. This is how some of the lithium is extracted from the world via these brine pools. This is evaporation pools, and they get it from these salt beds, right? But let's look at, for example, nations that have already committed via laws to have their electrification of vehicles actually occur within the boundaries of the countries when we look forward over the next 25 years. And we want to talk about the growth of electric vehicles. Look at the countries that have already promised to have 100% electrical sales. UK by 2030, Japan, China. Realize how massive this is? And then look at the countries that are going to 100% zero emission sales and stocks. You talk about Norway, Israel, a lot of Europe here. The rest of the European Union by 2035. You're only talking 10, 11 years from now where these major developed countries are going to be making this push. Of course, all trying to get in by 2050 to that 2 billion figure for electrical vehicles. Okay, let's look at the overall demand here in 1,000 metric tons. Currently at 685,000 metric tons demanded around the world. This is going to over 3x in just the next 6 years to over 2 million metric tons demanded of lithium. Incredible growth in demand. Let's look at the current state of the supply. And you'll notice that as the industry began to ramp up here in the mid-2010s, currently there is actually overall a surplus. If you look at the de-risked supply here of lithium, there's a slight surplus. This is why lithium prices have come down over just the last 12 months. Slight surplus, larger surplus if you include the total capacity. But of course, this includes lithium that is coming from countries that are absolutely not politically safe, where the supply is anything but guaranteed. You're talking about Bolivia, you're talking about Argentina, of course, what's happening in Chile with the nationalization. And we know anytime countries nationalize their resources, it tends to result in less of the supply coming to market. So you do have a slight buffer here in supply currently, but then you just look forward 6 years and you'll notice here that this supply curtails here over the next 3 or 4 years, whereas demand keeps ratcheting up from all these different uses. And so we are projecting here that by 2029, there is going to be a deficit of lithium carbonate. You can see right here, the supply tapers over, the demand keeps ratcheting up. So any mines that are going to be coming online in the later part of this decade, which could include the Nevada Sunrise new discovery, this is going to be sold at a premium when we get into the later part of this decade. Let's look at a few more fundamentals here for lithium. Right now, here what we're looking at is not a brine pool, but this is what they would call lithium in sediment or lithium clay. It's this really heavy kind of clay that they are extracting lithium from now in various deposits around the world. And this is the type of deposit that Nevada Sunrise Metals owns, the new Gemini deposit. So let's take a look at some more fundamentals. Let's talk about the largest producing countries for lithium currently. 86% of the world's supply comes from 3 countries currently: Australia, Chile, and China. Okay, so here's where we get into that executive order by the United States. You think about the fact that of this supply here, I mean, really only the Australian supply is safe or available to Western nations at this time. When we talk about Chile just having nationalized their entire supply, who knows what's going to happen with this over the coming years? China is certainly not politically safe to us. Argentina, has a ton of problems in their mining industry. Then we look at not the current production, but the total reserves in millions of tons. And you look at the world's reserves, the largest reserves actually come out of Bolivia. This is not safe. Argentina, not safe. Chile is not safe. Then you have here fourth, the United States, as far as reserves. Then you move down to Australia, currently the largest producer, but you can see they're only fifth as to the total reserves. So the world needs new reserves in politically safe jurisdictions when we look into the later part of this decade. Then, of course, we have China down there. I mean, so you look at, 4 out of 6 of the top reserves in the world are really not in politically safe jurisdictions. Think about this. Let's look at this on a map here. We have most of the world's lithium being produced here in what they call this lithium triangle. You can see the active mines are in this triangle shape here, and the deposits in this circular shape. So you can see all the lithium here that comes in this area of the world: Chile, Argentina, Bolivia, 54%. You can see there's only one mine producing lithium in all of North America. Talk about the United States and Canada combined. So this is why there's that executive order by the Biden administration, the president of the United States, saying we need to secure new lithium in the United States. This is why Nevada Sunrise, that has this new lithium discovery here in the United States, I think this could be so lucrative from an investment standpoint when we look forward over the course of the next 2 to 5 years. Of course, then you have all this production coming out of China. That is not politically safe. I mean, Zimbabwe, goodness. And then you have the production coming out of Australia. So this has been a look at the fundamentals of the lithium market. We have currently a little bit of a surplus of lithium production, but it's coming from politically unsafe countries for the most part, especially when we look at future production. And then we look at where the supply is, needing that supply in the politically safe jurisdictions. So let's take a look at what has actually happened here to the lithium price over the course of the last 7 years. What we can see is from the 2020 lows, lithium rose by over 1,000%. This is for the base commodity, as you had not enough supply coming online at the same time as you had the increased demand out of the growth from the electric vehicles, out of growth from PCs, cell phones, medical use. So then we had a lot of new supply coming online late 2021 into 2022. And after this over 1,000% advance, we've had what? A 72% decline. Now remember, lithium cannot go to zero. A real tangible asset that comes out of the earth that cannot be printed at the whims of politicians cannot go to zero. So when you have a commodity that has fallen by 72% that cannot go to zero, I'm going to argue that we are closer to a bottom than a top. If you had presented this chart to me a year and a half ago, just over a year ago, and said, hey, Christopher, do you want to take positions in the lithium market now? I would say absolutely not. It's just gone up over 1,000%. I want to be nowhere near this. Wait until we come back down into the support range of the previous few years. Then maybe I would consider it. Guess what, guys? Where are we now? We're in the support range for lithium. Let's take a look at how the lithium price volatility here has affected. This is going to be the newest mine to come online. It is a company called Lithium Americas Corp, much larger company than Nevada Sunrise, but they are also in Nevada. And this Lithium Americas Corp has the next, remember I said there's only one active lithium mine in all of North America right now. This is going to be the second lithium mine when it comes in production. But that's not going to happen overnight. That's still going to take several more years for this to come into production. But let's look at how the volatility of the lithium price affected Lithium Americas here. You're talking about over the last 5 years. Look at this return, 4,000% higher, amidst that 1,100% higher return in the lithium carbonate price. And then as lithium itself has softened, you see Lithium Americas here has fallen by 59%. So remember, guys, mining industry, very high return, reward potential, and very high risk potential. And you want to be buying these companies closer to the lows. And remember this, you only have to be right once on something like this to change your life forever. This is why I love the investment industry. This is why I try to share information on the investments that myself and our group of investors are making here. You only need one of these, and then you can pretty much retire. So think about that for your own life. Is this worthy, when we talk about now the lithium price itself, having come closer to a bottom than a top? Clearly, this was a top. Look at where we are now, down 72%. Okay, look, maybe the lithium price needs to drift a little further. Maybe, back down to 130,000, maybe down to 100, maybe all the way back down here, closer to 50,000. But you are absolutely closer to a bottoming process that is going to start here when you remember those charts of the supply of lithium, that within the next 5 years, the market is going to be in a deficit once again. And remember, if you participate in this investment via private placement with us, you get 4 years of free additional upside by the warrants that are given to you. These are not given to you if you buy the shares in the open market. Once again, I do think this company is worthy of your consideration in the open market as well, given that the market cap of the company is only $6 million, and you look at the market cap of a company that will be going into production or that is already producing lithium per year, you could be talking upwards of $500 million to $1 billion in market cap once a company successfully produces and extracts lithium. We just saw that in the 4,000% rise in Lithium Americas. And remember, these companies are very volatile. But I'll say again, you only need to be right once on one of these companies to change the course of your life forever going forward. Let's talk about the specifics now for Nevada Sunrise Metals and why I think this one is really worthy of your consideration here. The unique thing about Nevada Sunrise is that they already own 20% interest in this Kinsley Mountain gold project. That's right up here in northeastern Nevada. And the gold that is attributable to Nevada Sunrise is over 100,000 ounces of gold. The total deposit is 424,000 ounces. They have slightly over 20% interest. This calculates to 106,000 ounces of gold on the books for Nevada Sunrise Metals right up here. So this is why I say this company is slightly less risky than a pure exploration company only. They have a backstop. They have an asset that is already on the books. And then they have this new lithium discovery called Gemini. And the new lithium discovery is what we are most attracted to about this investment. So this is a unique situation, I think, where you have a company. I mean, this company is never going to go to zero because they could always sell this asset here for cash. But they have the new lithium discovery for the upside potential. Let's look at this more in depth. Remember, guys, this company is not paying me a damn cent to say this. I am producing this research simply to share with you the investments that I am making myself and that my colleagues are making. Let's continue with the research. The chart is ultimately what we care about here for an investment. I mean, all those fundamentals are great to know about, but what do we ultimately care about? It's what's going to happen to the share price. We looked at that 4,000% rise in Lithium Americas over the last few years. Okay, let's look at Nevada Sunrise. Look at this. Go back to 2020. The key point to remember here for Nevada Sunrise is that this company only began exploring for lithium in early 2022. So this rise here, up 625%, the stock has now come back to a very important support here at the 8-cent region going back for the last 3 years. But this rise here, 625%, was the rise based on the lithium discovery at Gemini. This rise right here, 3,000%, was based on that Kinsley Mountain gold asset alone. This was before the lithium discovery was made. So you see right here evidence that a market can reprice this stock higher by 3,000% just based on the gold asset alone. And now we have this new lithium discovery to talk about. The market has soured both on gold and lithium over the course of the last 3 years. We know that. We know these companies are trading at a fraction of the value that they were trading at just a few years ago. But we have the evidence that when sentiment shifts, when the commodities begin to pick up in price, that the market will revalue this company higher based on either gold or lithium. And then the real juice would be if the market says, hey, both of these deposits actually are worth multiples of what they are currently trading for. Very attractive looking chart here. Currently selling at the 8-cent level. When I look back at this rising trend, I mean, I couldn't ask for a better buy opportunity right here. Remember, they're not paying me to say this. This is what I'm doing with my money and what my colleagues are doing. Is it possible, for the market to give us a little blip further, maybe fall a few more cents further? Sure, anything is possible. Remember, they have the backdrop of that gold deposit on the books, and they have the new lithium discovery. Let's talk about the new lithium discovery. They have done 5 and only 5 drill holes at this Gemini lithium project. This is the new discovery that they just made in 2022. They have done 5 holes, and of those 5 holes, 1, 2, 3, 4 show mineable grades of lithium across intervals all exceeding 100 meters. Average of the mineable intercepts here is 295 meters, showing lithium in excess of 1,000 parts per million. And the parts per million, 1,000 parts per million, or roughly 1%, is a typical mineable grade cutoff for lithium deposits. So you have 4 out of 5, and this hole here, 346 meters at 635. Some of this would be mined too. You see certain intercepts here greater than 100 meters of over 1,000. So some of this would be mined. But when we're talking the entire intercepts, 4 out of 5. And remember, these are the only 5 drill holes that they have ever done. You have mineable grades of lithium here. This has all the bearings of a mineable deposit shaping up. Remember what happened to previous discoveries for Lithium Americas when they show and eventually move toward production stage. Let's look at how these intercepts look. This is a high-level map of those 5 drill intercepts that we just looked at. And the key point to take away here is that you have 2.7 kilometers separating the farthest distance between hole 5 and hole 3. So you have 2.7 kilometers of potential mineralization here. You have so much exploration potential here, it's not even funny. The amount of additional drilling that they're going to be doing when the lithium market picks up to expand the initial resource size. Huge swath of earth here that is open to additional exploration. Let's look at this on the overview map. So this is what we were just looking at, that 2.7 kilometers right there. The initial resource estimate that is coming out within the next 12 months is based on this yellow triangle alone. But they have already been permitted for all these additional holes here that make the shape nearly twice the size. And this will be the expansion of that initial resource estimate that happens over the forthcoming years. And then when we look at what this size is compared to the entire size of the project, I mean, there is the potential for just massive expansion here. It's not going to happen overnight, but when we're talking the next 2, 3, 4, 5 years, I mean, this project could be a multiple of the yellow shaded area, which is what the initial resource statement will focus on only. And then we look at, when that could be happening. The expansion drilling here in the later part of this decade, hopefully, based on expectations of mining trajectories, when we run into a supply deficit around the world for lithium, this could be really good timing. You look at access to a road right here. Here's a major Nevada highway running through the property. Look how close this is to some of the initial drilling. So you have easy access to this project here in southwestern Nevada. Let's talk about some of the testing that they've already done. It is not hypothetical that they are able to extract lithium from Gemini. They have already run tests on some of the columns that they have drilled here, and they have achieved a 90.2% extraction rate from the existing drill cores, which compares quite favorably to the 84% lithium that is reported by Lithium Americas at the Thacker Pass project. Remember, this is the project that we looked at earlier that rose 4,000% from the lows to the peaks. We've got favorable metal testing here going on for lithium. This is the extraction of the lithium that has already been produced. So this is looking good. I should say that the company is exploring some novel ways of extracting lithium from the ground that would significantly reduce the cost going forward. They're open to the traditional open pit mining methods that are used for these clay deposits. However, they have engaged a consultant here to do additional testing, and so far this has been favorable when you look at the extraction profile there. Let's talk about the next steps for the company. I mentioned that this company, within the next 12 months, actually, I mean, on paper, this could happen within the next 6 months. I'd like to give them a little bit of buffer room here. But let's talk about the end of the first quarter of 2024. What we should have is the initial resource estimate for the drill results that have already been done on the Gemini deposit. This will encompass the initial 5 drill results. Remember, if you had a company that had taken 5 drill holes and just put them relatively close together, you could not make a reasonable resource estimate from that alone. But given that they have a 2.7 kilometer swath of earth that they have already tested, you're going to be able to get that initial resource estimate here by the end of the year. Moving into the first quarter of 2024 is when they are expected to produce the cost estimate of the resource size here. And then when we look into next year, they do the additional drilling that we already showed, and they should be able to continue expanding the resource size. And hopefully that expansion continues when we're looking forward the next several years, just at the time when the world is running into that lithium deficit. Very exciting things coming here. Let's rewind. Remember the chart. This is, basically this is what counts. Is the company in a good position to buy? If you had rewound a couple years and said, hey, Christopher, they're doing a financing at 34 cents or 40 cents. Do you want to participate? I would say no way. I wouldn't touch that with an 8-foot pole. Talk to me when we're back down toward some of the lows that have been hit over the last few years. There we are. Reward to risk perspective, this looks very favorable now. Remember some of the advances that have happened based on the gold asset alone, the Kinsley Mountain. Now we have the lithium discovery. Market has softened, and that's why we want to be interested in this now, not when the market is already at peaks like this, right? Let's look at the key takeaways here. You've got this new lithium discovery at Gemini, backstopped by the 20% ownership in the existing gold deposit, which gives 106,000 ounces attributable to Nevada Sunrise here. We have negotiated, if you're going to participate via elite private placements here, we have negotiated an additional 2 years on the warrants for all of our members, in addition to the 2 years that the company has already agreed to offer via the private placement. Therefore, the total time that you will receive if you participate in this private placement with us is 4 years. So if the company expands the deposit, moves toward production, gets bought out by a larger mining company, there's certainly plenty in that Nevada area, any or all of the above, you're going to get that additional upside for 4 years. 4 to the 5 drill holes have already shown the mineable grades of lithium. That's the average of over 1,000 parts per million across 295 meters on those 4 out of 5 holes. Very attractive mineable grades there. Remember, 2.7 kilometers means there's a large trend of mineralization open for additional drilling. This is what they will be doing over the coming years. But remember that they will be expanding this way beyond 2.7 kilometers. You saw how small that was even relative to the entire project size. You got the 90.2% extraction already achieved on samples here, comparing very favorably to the upcoming Thacker Pass mine by Lithium Americas. And this is the big one. You got that maiden resource estimate and the preliminary economic assessment coming out within the next 12 months for Gemini. No long-term debt. We would want to stay away from a company that has a lot of long-term debt. Solid insider ownership here. And the chart is at that significant support that saw the 3,000% rise just for Kinsley Mountain alone before the company made the lithium discovery. So in my opinion, the big two things about this private placement investment opportunity in Nevada Sunrise are the 4 years that we have negotiated for you here as members on those warrants, and then the fact that you have these major catalysts coming out within the next 12 months. Okay, so as I said, the deadline to register, if you are not a member of Elite Private Placements, the deadline to register for this is Wednesday, October 11th, 2023. I want to re-emphasize one point here. As we are broadening our horizons from precious metals, it is not only a question of selling precious metals and moving that into fiat assets. There is another alternative, which is to own other real tangible assets that will be needed by civilization, needed by the growth of the capacity for transportation, for industry, for technology. That is one of the opportunities that we have here. So there are other ways to diversify. And I want to bring up one last chart here that we look at every several weeks. I want to update you on this because the longer that I look at this, and remember, this is the Dow to gold ratio, going all the way back to freely traded gold here in 1971. And we look at the conversion here that's happening between the Dow to gold ratio. It's in this very, very, very tight period here where the ratio has essentially been moving sideways, basically as a net sum for the last 8 years, but even tighter here for the last 3 years. This is getting ready to break. And if this thing breaks upward, which I would tell you right now, by the look of it, the figure that needs to be exceeded to break upward is 19.1. And where did we close here? Just below 18. So a little bit over 6% away in the Dow to gold ratio. And remember, if this thing breaks upward, it is going to be a generational shift toward technology and industry. And the way to participate in that, if you don't want to get involved with speculative types of stocks or fiat assets, the way to participate in that is via other commodities, real assets that are going to be needed by the growth of technology and the growth of our species. And I believe lithium, the data is as clear as could possibly be. The growth in electric vehicles, the growth in batteries, the demands by the year 2050 by world governments to have those 2 billion cars on the road. You know, if you ask me for a best assessment of what is going to happen here, it appears to me that this is going to be breaking upward. I am not losing all hope for the precious metals. There's still the chance this could move in favor of gold, but I think the writing's on the wall here. We should start diversifying sooner rather than later into other tangible assets. Deadline to register Wednesday, October 11th. I look forward to having you with us.